What's the best way to transfer money to the Philippines? I'd like to take a couple of moments and explain some of the cost and risk associated with that. There are lots of alternatives. The three categories tend to be banks, financial services, and the cash, moving the cash in your pocket, just taking straight cash there. Banks tend to be cheaper because they are heavily regulated and they are insured against certain types of loss. There's usually a little bureaucracy involved with the bank, so it takes longer. If you can wait the time that's required and jump through the extra loops that a bank asks, you'll probably find that a banking relationship does it for you cheaper than maybe the financial services market. The bank can be cheaper because they have a special relationship with the government. They often receive their money from the government, get great discounts from the government, and so that enables them to sell you their product for cheaper. Not to mention, you usually have a relationship with the bank that you're dealing with, and so they charge you for money in other ways, and so they tend to give you a little bit of a break on this. How about an example? Let's say John and Bob are two guys who have three things in common. They like the Philippines, they bank at the same bank, and they arrive and depart for the Philippines on the same day. John, who has just spent 2 weeks in the Philippines, has landed and he is in a taxi on his way to his house. He realizes that he has pesos in his pocket and he would like to change those to US dollars so that he can spend them. He tells the taxi driver, "Take me to the bank," and the driver takes him to his bank. He goes up to the teller window and he says, "Can you change this for me to US dollars?" And the girl says yes. She doesn't really discuss conversion rates or anything like that. She just says, "Okay, you have 50,680 pesos. We'll give you $100 for that." But there is a charge, and so that charge is going to be $5. And so instead of $100, he gets $95. The truth is, one of the aspects of making money that the bank just went through is the rate at which they buy and sell money was probably 33 pesos per dollar, or to be exact, instead of 50.68 pesos. Sometimes they buy or get it for 50.35, a difference of 33 pesos. And so they made money, probably 65, 66 cents off of John in that way. Technically, there's another way for them to make money because the bank buys their money through the FX, the foreign exchange, but we're not really going to go into that. We're just going to look at briefly the fact that the bank made money off of John because of the difference in what they buy and sell pesos for. 33 pesos in this case, but they usually have a minimal charge, so they're not going to charge him 65 cents. They're just going to go ahead and say, "Okay, $5. And that's what they did. They said, "Okay, $5. John got his $95 and went skipping happily out the bank. John didn't realize that when he was coming in the bank, Bob was walking out the bank. Bob, the other guy that likes the Philippines as well, Bob is going to the Philippines today, and Bob thought, "I want to take money with me to the Philippines. I want to take pesos. So the moment I get off the plane, I'll be able to just start the fun." So he goes to the bank and he goes, "I'd like to buy 1,000 pesos worth of money." He gives the girl 1,000 pesos and she gives him 50,350 pesos. It's a decent rate. It's fairly close to what you see on the internet when you look at what the rate is going for the day. Not exactly, but it's fairly close. In addition to that, before she gives him the 50,350, the bank oftentimes charges a flat fee or a fee based on a percentage of what you bought. So she put in 50,350, and then she minus something like $10 worth of pesos or 500 pesos, and then she gave him 49,850 or something around there. So the bank will charge you, generally speaking, some kind of transaction fee, either a flat fee or a fee based on a percentage of what you took out. And they will also charge you, but not mention, that they were getting paid for the difference in buying and selling of pesos. So they have a tendency to charge you twice there. But the overall cost is still not that bad. It's not that brutal. You go, oh, well, that's nice of the bank. Is it really nice of the bank? In reality, Bob probably has $10,000 in that bank, and the bank loans Bob's money out to other people and charges them interest. For example, if Bob has $10,000, more than likely the bank has loaned out $9,000. They pay Bob maybe 4% interest annually on the money that he put in the bank, and then they charge whoever borrowed that money from Bob, from the bank in the name of Bob, 8, 12, 16%, and that way the bank is making 8, 10% off of Bob's money. So the reality is the bank is charging Bob for the conversion of Philippine pesos, as well as making money off of him as a general customer. So with that in mind, they can afford to charge Bob less for the conversion services of converting US pesos to US dollars. Hopefully, Bob didn't hand him his credit card and say, please cash advance me $1,000 and give that to me in pesos. Because if he did, we all know that when you buy something from the store with a credit card, like a computer, let's say, they'll charge you whatever the interest rate is on your credit card, 8, your 10, 12%, whatever it is. But when you cash advance or take money off your credit card, the interest rate associated with that is generally much higher. It's in the 15, 20, 25% range. So hopefully Bob didn't cash advance, because had he cash advance for $1,000, he might be paying in the neighborhood of an additional $20 a month just for that $1,000 that he cash advanced to go to the Philippines. He'll pay that $20 a month until he pays that $1,000 off. Something else Bob or even John could have done is, if they had a Philippine bank in their own country, in the U.S., there are some banks like PNB, Philippine National Bank. They have offices, they have branches in the U.S. John or Bob could have taken their money, put it in the Philippine National Bank, and then when they got to the U.S., got to the Philippines, they had their ATM card, swipe their card, and they would be able to get their money out, no charge, because you're not charged for taking your own money out of the Philippines bank when you're in the Philippines. As well as the Philippine bank probably would have given him a better rate of conversion, because that's the Philippine bank buying from the Philippine government. So the rate that they get is better, cheaper than the rate that the U.S. or some foreign country would have gotten. They would have passed that on to John and or Bob. Before you leave, there's something you need to consider about banking abroad. When you bank abroad, you should advise your bank that you are going to the Philippines, when you're going to the Philippines, how long you're going to the Philippines. On my first trip to the Philippines, I didn't know this. I didn't advise my bank. And so when I landed, I started having a good time. And I had money in my pocket, and I decided I'll get some more money before I run out of money. I don't want to be scuttering around looking for money and not have any money in my pocket. That was a wise decision, because when I went to take money out of the ATM machine, it was refused, and they said, contact your bank. I contacted my bank, and they advised me that there was someone in the Philippines spending money using my ATM machine. And I said, yes, I know that's me. I'm in the Philippines. And they said, oh, we didn't know that, so we locked your account. To unlock your account, you need to go to a branch and identify yourself. And I said, is there a branch in the Philippines? And they said, no. And I found out that I was going to have to wait till I got back to the U.S. so that I could identify my bank and have access to my vacation money for the Philippines. Fortunately, I was able to borrow the money from a friend and continue with my vacation. And then after I got back to the U.S., I was able to straighten out that situation, avoiding a vacation catastrophe. So it's very important that you let them know that you're going to be out of country when you start using your financial instruments, your credit card or debit cards. Speaking of debit cards are the best form of credit card or automatic card to use when abroad. Debit cards are almost accepted everywhere, ATMs, at stores, etc. But there is a problem. If you should be the victim of fraud, getting your money back is going to be kind of difficult if someone steals your information and then charges money to your account, or even if you go to an ATM, you stick your debit card in and your debit card doesn't come out, or you stick your debit card in and only some of the money comes out, or none of the money comes out, then you have a problem. If your debit card is with a major bank, then you will, when you contact the ATM company, they're going to tell you to contact the people who contracted for the ATM machine. That might be a bank in the Philippines. That might be an individual company. They're going to tell you to contact that person. That person or company is going to tell you to contact your company, the people who issued you the debit card. And that's where the fun ensues. There's three people telling you, it's not my fault, it's not me, go see him. Hopefully, you've used a debit card that belongs to a bank. A bank has certain regulations that it must follow, and granting you access and recovery of funds are part of the game. And so it's easier, not easy, easier to get your money back that way. If you got a debit card from a private company, there are lots of those that issue cards like Rush Card and Access Card, and the credit unions offer them, and schools offer them. But if you got it from some company that is not a full-time bank regulated by all the rules that a bank is regulated with, you're going to find that getting your money back is going to be a little bit more difficult. A credit card is great in that it has more loss protection. You're insured against certain types of losses. If someone steals your credit card or steals your information and charges something, you call them up and they instantly put the money back in your account. If you have some kind of incident where your money gets taken, you call them up and you have an easier chance of getting your money back. Credit cards tend to have more charges associated with them, though. So it's a little bit more expensive, but it's an insured spend, so that's nice to have. Now we're down to financial services companies. We're talking Zoom, Western Union, LBC, Remitly, MoneyGram. Any of those, they all function basically the same, and they can be pretty good at times. I've tried them all, and I gotta say the one that I prefer best is Zoom, but it is by far not perfect. The problem with the financial services companies is they tend to charge you a little bit more than the banks do, but the benefit or primary benefit is they tend to be quick. You do the transaction, your money is there instantly, except for the first time that you do it. The first time that you do it, there's going to be a verification process, and so that might require an extra call to you, from you, to straighten things out. And once you get the process worked out, then they're very good. You do your transfer, the transfer is instantaneous. Back to the bad side, they tend to be a bit skittish, shaky, nervous. They are afraid that they will be charged with some type of money laundering crime. They have to make sure that they're not helping people launder drug money or launder terrorist funds from the U.S. or from some other country to a country on a terrorist watch list, or they also have to make sure that they're not helping a person has tax evasion issues. So they're very nervous. And what that means to you is they can stop a transaction right in the middle. You could send some money somewhere. Maybe they take the money out of your account and then they say, freeze, this account stops. And then you have to call and explain to them in a manner in which they find acceptable before they release the money, or they may not do the transaction at all. They can and will terminate their relationship with you, tell you you're no longer a customer with little or no explanation. So, them being skittish and nervous, that's how that affects you. So, that's certainly something to watch out for. So, in summary, the optimum situation would be you having access to a Philippine bank in the U.S. or your country. You'd deposit some money there and also bring money in cash in your pocket with you as you arrive in the Philippines. Then, when you hit the ground in the Philippines, you can take your ATM card and withdraw money from the Philippine bank at no additional cost. You'd probably get a better rate on the conversion of the money because of your relationship with the bank. If you don't have access to a Philippine bank in your country, having the U.S. bank send you to another bank in the Philippines to a debit card might be another alternative for you. The problem there is it may take a little time, 1 day, 3 days, 5 days, who knows, depending on the bank. So you need to have access to money while you are waiting for that transfer to take place. If that is not an option for you, then the financial services route, your Zoom, LBC, Western Union, Remitly, that type company would be a good option. The benefit, of course, instant transfer. You press the button and the money is there. The downside, it costs more, and like I said, sometimes they can be a little skittish or nervous about releasing your money to you. Anyway, thanks for joining us today. That's another video entry into my Philippine Diary. Don't forget to like, subscribe, and share. Thank you.